Let's take a look at XRP and compare what price has done versus what I was thinking from my last analysis that I went over last week, and it focused very heavily on the previous weekly candles body, and I believe it was the candle opening. And I thought that once price would get above this area and base off of it, it would potentially get a move up to 66 cents or some type of move. So let's dive into there and see where it has broken down. All right, what we're looking at on XRP price is a macro view. These are origin lines, and they go back to the origin of price for XRP. So if you want to go back in time, right now XRP is interacting with this same line here. This is back from 2016, and this line here from 2016. It got all of this, this type of price action was on this same line that we're dealing with now, right? So we're going to zoom into this area here, knowing that on the large scale of thing, multi-years going back to 2016, we're dealing with those same lines. Very, it has a positive slope, so it's not like the same horizontal, but it's the same it's the same damn line. So these are origin lines. I could probably get rid of this guy here. Looking at this, typically the rules for origin lines are as follows. If you go crash below an origin line like this one, and you use it as a rejection and make a low, take out a low like it did here. So then, it technically actually made a bunch of higher lows, but regardless, it went below and got rejected, came back down. On Bitcoin, so XRP doesn't follow the same rules as Bitcoin, right? On Bitcoin and the vast majority of crypto currencies and their price, the rule is before you can go above this origin line under which you just fell and got rejected from, you have to touch the next one down. And Bitcoin has only broken that rule ever once, and that was during Wyckoff. That was in I believe July of 2021. And it's only one time ever in its history because it wasn't real price action. It was a plan. It was literally planned, textbook type of stuff. So that's why it broke a specific rule for one time only, because it was so far from mass market psychology that it just broke rules, right? And you can see here that it broke below this origin line, did not use this as support. And typically, if you do come down and go test this line, the most you can do is a failure pattern above, meaning when you go above it and you come back down to touch it, you fall through it. And that's what happens if you don't touch the next one down after going below it and using it as rejection. So in my observation here, XRP has broken that rule. All right, that's my first observation. Now, that's the macro scale. Now we're going to dive into smaller time frames. And we're going to put this triangle back on. Another simple observation. And again, right now I'm just making observations so you can see where I'm coming from when I start doing the analysis here. It's a triangle. Probably everybody's talking about this, right? As of now, you can adjust the triangle to make it look like it's still in it and all that kind of stuff. And it looks like, if you buy the bottom of a range and sell the top, short the top of a range, you're going to do pretty well as long as it stays in the range. And then you simply stop trading it once it doesn't work anymore. But it's extremely profitable during the time it is. And that's why you use risk management to stop yourself out the first time it doesn't work. In this idea here, with this triangle, it looks like this is a pretty good time to try to enter the bottom of the range for a long position with risk management involved, right? And again, this is not a call to action. This is not financial advice. General observation. However, if you layer on another type of analysis on top of this, in terms of what are the probabilities of this exact moment right here, how can I see whether or not it has a better chance or a worse chance of this is the moment it doesn't work, right? Because when you're trading a range, it's just going to break out of the range at some point. With gold, it was in a 10-year range, or still is, right? It was in a 10-year range. But over time, price of assets breaks out of a range, and you can keep trading the same damn line. Like, you could potentially, for an entire year, just keep short in the same line and long in the same line, even though there might be weeks and weeks spread out between the plays, but it could work over and over and over again. But the key point is there's going to be a moment where it stops working, right? Either to the upside or to the downside. And what I'm doing with this is this will help us understand, is there a heightened risk that this is the time it won't work? And so the way I'm going to zoom into here is, I mean, structurally, it looks like this is a good time to enter. And there's going to be high volatility tomorrow on Thursday, October 13th. So what I'm about to say, you got to take with a grain of salt, because tomorrow's going to be whale volatility. They're just going to piss around with the price of Bitcoin and stocks just to piss around, because all they want is volatility in both directions. It's going to be bidirectional. So without that being the case with the CPI data release, what I'm about to say would be, I guess, more in tune. But you need to add on what I'm about to say. You need to take that idea of bidirectional volatility and put that onto what I'm about to say. All right. But without that bidirectional volatility of CPI data release, what I'm about to say would stick by itself. How I interpret this this rainbow or the ribbon or whatever you want to call this here, and these are my, I guess, proprietary ribbons so these are my long ribbons, and I'm on the 1 hour chart. The way I typically interpret this is, usually if you cannot get back into the ribbon and stick your landing, so let me zoom in a little bit better, and I can get rid of RSI. I just need Stokes or stochastic RSI. I might actually prefer just straight up stochastics. So I like to mix stochastics with my ribbons and on the time frame I'm using. So usually, if you go up into the ribbon and you can't stick the landing, and when the moment you're going up into the ribbon, you max out your Stokes and it does the full oscillation. Let me zoom into the Stokes. So during that time, you get a full oscillation up. Like, see this? That's one oscillation, two oscillations, right? So here. Let me actually just do it. Let me put a line in the middle of these, roughly like this. So that's the peak of each oscillation, okay? And usually, to analyze over a sample size of like 100 of these, the moments that have a greater risk of breaking down and just a flat out rejection from this is when you do get a full stochastic oscillation, and it got all the way maxed out, came all the way down, and when it comes back down, you can't stick the landing. That means if that were to happen, the next one is probabilistically, like in a statistically probable way, it's likely going to be a lower high, and then eventually you work yourself out, or you work yourself down, right? So independent of this triangle, it looks like it's a little more likely that this is the moment that the river pushes price down. Now, there is another layer of, I guess, analysis on top of this. When that does happen on my ribbons here, you can get a reset, like, taking a nap and now you have some more energy. So this gray line acts as that reset button. Price doesn't have to fall below it, but usually when you get one or two oscillations that you can't stick the landing within the ribbon, or get above it and stick the landing, which is even better. That's very bullish. Kind of like it did actually, right? You see this right here? See how it got above a ribbon, it stuck its landing in it? That is very bullish. What happened right here? Went below it on the first oscillation. Here, let me make myself small. Let me show you the difference. So this is one, see this oscillation down here? It did all of this work on that oscillation. And when it came down and the oscillator bottomed out, let's go like this. See how I put this pin where it bottomed right there and then flipped back around? Price at that moment let me zoom in, stuck its landing within this ribbon. See that? That's usually a good signal. And it worked out pretty well there. All right. And what we have going on right now is sort of the opposite. But even if it does fall, there is a decent chance. And I haven't backtested this how many times, it does work out, but you can use this as a bounce point and then kind of reset yourself to get back in here and get above the ribbon, thus come back into the triangle. So for XRP, if XRP falls out of this triangle, I would watch out for the idea, especially during Thursday, right? Thursday's high volatility. It'll be volatility just for the sake of volatility. So even if XRP plans to stay in this triangle, you could easily get a wick down to here, to the reset level, and then it pops right back in. You see what I'm saying? All right. But independent of Thursday being October 13th being high volatility just for, the sake of whales pissing around with money, outside of that, it could come out of this triangle, simply want to test this and start making, and then get its way back above or inside of the rainbow or the ribbon, and then work its way back into this triangle and then bust out of it at a later date, maybe 1 or 2 weeks. As of now, though, it looks much more probable that this gray line, somewhere around 446.5 cents, 466 or so, 467, it looks like it's more likely this will be hit first, as opposed to a price movement above 50 cents. So it looks like 466 is more likely, it's not guaranteed, it's more likely to be hit before 50 cents is hit. But what happens after that, I don't want to postulate yet, because we don't know what. I mean, it's all depending on how the CPI numbers come out and how the market deals with it. It's literally the price of all crypto depends on that. You could literally throw your technicals out the water for short term and micro and short term and some mid-term price analysis. But mostly micro and short term price analysis, it won't matter. You can literally throw everything away during those moments. So watch out for that level, 466. And the whole point of this, I guess one of the things to watch out for on XRP is, if you think it's breaking down out of this and you're trying to go short because you're saying, oh, the triangle's breaking down, just realize it could hit this and jump right back in, even without CPI data being released where you just get volatility, right? But with that, let's say the market just wants to go both ways and then land in the middle tomorrow. Well, it's going to hit this, bounce back, and come right back in the triangle. So if you're trying to short at a breakdown out of this triangle, just be careful, because that is something that's in play. Now, I'm not going to try to determine whether it's going to break out of this triangle and hit its target of, it's probably going to be a higher target at this point. So this is the next, so 70 cents. Yeah, it'll be increased by about, let's see here. So October, it'll be closer to 69, 70 cents at this point. I don't want to make guesses whether or not 70 cents will, the breakout point will be hit yet. We're going to have to take it inch by inch, but I wanted to prepare people for the idea that it looks like it will break down out of this triangle. If you're trying to play that, just a heads up, it could easily bounce right back into it. If 466 is hit, is broken, then you have a couple levels down here. You have an origin line at 447, and then you have, I guess, another bumper down here at 433. For some reason, this gray line and blue line, they're just pretty magic for most cryptocurrencies. Let me look back in time to see if XRP respects them or not. When it's, yeah, it actually respects them fairly well. So you see how it breaks down out of this rainbow and hits these lines almost exactly. And it happens a whole bunch. So you have a couple breakdown points, but if it does break down and bounces from one of those two lower points, at that moment, if this target right, son of a bitch, right here or here are hit, then the next bounce up, assuming it bounces, would likely be a lower high. And it would probably come up to the triangle and get rejected from it, or come up to this gray line and get rejected from it. If price were to bust below 466, come down to 447 or 433, right? And if it were to bounce from one of these two areas, you're going to be on a lower high watch. But if 466 is hit, it's kind of a 50-50 whether or not you're going to make a lower high, or if you're going to jump back in the triangle with a chance of going to 70 cents. If absolute mayhem breaks out and it does break out of this triangle, also to the upside, just realize it's a very clear target of right at 70 cents. That's an easy analysis. It has a strong chance of getting that high if it breaks out of this triangle. Hopefully that was helpful for XRP fans.